We part of the reason for Smash Up to happen was that we wanted to showcase some of the interesting ideas, innovations, and startups which are happening in Chandigarh and out. So we come to this interesting part. We have 3 showcases.
Good afternoon to all of you, and welcome to the session Funding Options for Growth. We have with us 3 experts. Arora from Grant Thornton. He's Director Client Services with them, and he's a CA, CPA, 12 years of experience, and for that he was with Ambit Corporation, which is an investment bank. So please welcome Paras. We also have with us Siddhartha Kumar from Aegis. Aegis is an investment fund, $50 million, and they invest in the Indian and the Asian subcontinent in sectors related to real estate, infrastructure, telecom, and retail. A very warm welcome to you, Siddhartha. We also have with us Vivek Khare. Vivek is Senior Vice President Corporate Development, Naukri.com, and he looks after the corporate investment program. And they've had, I'll let Vivek tell us more about it, but they make also investment in consumer internet related businesses with all stages of growth. So welcome Vivek to this panel. Let us start, before we get all of them to talk, what are the questions that you have from the panel? Can the audience talk a bit about what you have in your mind? Give me the money, okay? So money, quick, as much as one can get. Okay, anything else?
I think it's uncomfortable.
Yeah. Just give us the money. It doesn't matter what we are doing. Yeah.
So how do we approach venture capital?
Okay.
They look for
Okay. How do you connect with anybody who is giving the money, and what are they looking for, and what should you expect from them?
Is like getting an angel investor or venture capitalist is like getting a new father. I mean,
Okay.
are they going to control you then?
Okay. So issues of control after you receive the fund.
One thing I would like to ask, what they see in the startup to invest?
Okay. What are they looking for?
What are they looking for, and what data they need for
Right.
making this?
How much, what is the preparation they are expecting? What are they looking for in the company? What are they looking for in the founding team? What are they looking in terms of how much the business has grown? So what is that niche, the sweet spot that you should be at before?
Just like their
Yes.
checklist.
Yeah, their checklist that we should have, right? Okay.
Inventor, for an inventor who's done the invention to some extent as on his own or on her own,
Yeah.
but now needs a venture capitalist
Okay.
to carry forward that invention
Right.
to the public, to the masses. So what are we?
So when should an inventor look for funding? After the proof of concept?
And what, a venture capitalist, what are they looking for from an inventor? Do they need a company, or are they comfortable with the individuals?
Okay. Right.
Right.
Okay. Yeah. Please.
Okay, I'm pretty negative about funding, frankly speaking.
Okay.
So basically what I feel is, what is the purpose of a web startup getting some funding like in millions of dollars? Some models like Y Combinator are pretty successful because it's something like a web, I don't think so a web startup needs so much of funding. Presently I'm just talking about tech startups, not the other ones. I don't have any knowledge about them. So what's the need of it?
Okay.
Why
So
can't
maybe-
a small amount of money, like even $20,000, like what Y Combinator does is
So
good
perhaps
enough?
self-funding, family funding versus venture capital.
Yeah.
Right. So some funding, but not really to the level that a venture capitalist would want to invest. So over to Paras
And
now.
what the public wants. The participants want.
All right. So we begin now, and each of our panelists will speak for a bit about their, sweet spot that they invest in. What is it that they do, and then we'll have our discussion and informal discussion here. So over to Paras. Paras, what does Grant Thornton do, and what is the task? Why should anybody come to Grant Thornton?
Sure. Thanks, Anupama. Hi, everybody. I see all startup faces, despite, I know you guys are here for last 7-8 hours now, I think. Welcome all. Grant Thornton is one of the world's top 5 accounting and business advisory firms. We help people, entrepreneurs. So we are an intermediary. We help people like you and people on the other side of the table, which are VCs, private equity guys, to come together. We understand what you do, we understand what they look for. So we bridge the gap. We take you to the next level where we meet both, we help both sides shake hands and move together. Very important, before any VCP or seed capital kind of a guy funds you is a business model. I'm sure every one of us sitting here has an idea. To put an idea into a plan is very, very critical. Unless my idea is not capable of generating money, this is what they look for. Nobody's going to fund me. So putting my thought process, putting my idea into a business plan is very, very important. Now, how you do it? You might be a tech expert, you might be a guy doing very well in his or her own domain. But how to put all and plug all gaps together? You're not a financial wizard. So how do you do it? It's very, very important how you structure your business plan, how you plug all loopholes. You should be aware, when you run a business, you should be aware what are your needs at least for the next 3 years in terms of funding, in terms of various options that you have for funding, what kind of markets you should look at in terms of right sizing your client base. So all these factors are an integral part of your strategy that culminate, that all are captured into a business plan. So when you talk about a business plan, for a layman, it's like a statement of your profit and loss account that talks about a further step down to your cash inflows and cash outflows. So how much money you need today, how you're going to invest that money, how is that money going to come back to you. The other important factor, for an investor is scalability of your business. He would not be interested to fund a business, where you feel the domain is going to be X amount. So he has to look at scalability. No investor is going to fund a business. So a critical example is no investor is going to fund a mom and pop shop, right? Because he knows that their end is, probably visible, right? So you have to have an idea which is scalable practically. So you have to have something which is attractive to an investor. So unless you don't multiply X times, he's not going to make that X returns. I'm going to talk about it as we more progress into it. I'm going to leave it to Siddhartha and Vivek to talk through about them, and we'll be open to questions, and I'll guide you through the entire process of how you do a business plan, how you approach an investor, what they look for in a business plan, and how do you scale up and give them an exit, etc., etc. So I'll be open to all questions. Thanks, Anupama. Over to Siddhartha.
Sure. Thanks, guys. Hello. Can you hear me? Okay. I can share a couple of things which would be of interest to all of you, because my journey is similar to where you guys stand. And I essentially started as a lawyer, and I was doing a lot of due diligence and work related to real estate and infrastructure. This is in 2003 when the market was really good. I met a lot of developers. I met a lot of business guys who were funding India, especially in the real estate and infrastructure sector. We worked very closely with them for over about 2-3 years. And in 2005, I just started realizing that, I understood how these guys actually plan a project, how they infuse funding, how much funding it needs, and how they go ahead. And the critical aspect of doing anything, I'm going to be very specific to infrastructure and real estate because that's what I understand clearly. So what I realized was India had a lot of tiger traps, especially in the real estate market. It's a very unorganized sector. Everybody is buying and selling land every day, but there's no stipulation. The traders as well as the brokers don't need a license. It could be a rickshawala who might be brokering a deal to your family friend, to anybody. I mean, you just make a mention that you're looking for something, even your uncle will come down and try and sell something to you. That's how this market is. Me having a legal background, I realized there was a gap which I could fulfill here. Not only for the corporates, because corporate due diligence on real estate is very new again. Even for individuals, now people even go to a lawyer when you're buying a house or when you're looking at a flat. Initially, that wasn't there. So the sector is getting a little bit of recognition. I realized my legal background and my expertise in this field helped me associate with the bigger groups and also gave me the inside knowledge as to how a company operates and how they want to structure something. The more I spent time with them, I got motivated to, because I knew how to buy land, I knew how to do the licensing, I knew how to do the due diligence, and the more I spoke to people, I realized why don't I create my own fund and maybe infuse it in real estate or infrastructure. Or the more I thought about it, I thought, why don't I go to real estate companies whom I'm already working for and tell them, like, maybe I can raise money for you, or I can structure the funding for you for a particular project, because I don't have the background of doing a project, but I understand the nitty-gritties of putting a deal together. So it was a learning curve. And I firstly chose a parcel of land around Chandigarh, and which was less than $1 million, and I didn't know how to fund that. So I realized, because in 2003 was the first time I think the Apartment Act came in Chandigarh, and I thought there was an opportunity there because I had seen a lot of builders operating in Delhi, but there was none here. So how do I put that together? I went to family and friends, and I said, I have a business model I want to fund, which is like buying 4 10-marla plots, which then was just, I think it was about $200,000 each. And I sold what I had. See, you had to put your skin in the game for others to put money on you. So I realized I sold the asset that I had was in my mother's name. Firstly, your parents are like VCs. You have to convince them on your idea. Because if they believe in you, only then they're going to lend you money. So I think I convinced my mother very well. She sold a plot, I got 50 lakh rupees. Once I put the 50 lakh in a joint account, I asked my family, some friends to join hands. I had another 2 friends in Delhi who showed up with the money. We went to the auction and we bought 3 plots. And that's how my journey started. To cut short, we created flats, we made money, and we moved on. I had a bigger pool of money now, and I think I was more confident and bolder. The next attempt was to buy a 25-acre lot and do a housing project there, which we initiated in Himachal. The Himachal government had just opened up the housing sector for the first time, so I saw a huge opportunity there because legally we had assisted a lot of companies to set up base in Himachal. I'm just telling you, you need to be aware of where you can actually, where the opportunity lies. So I'm just telling you very generic how I got into this. From doing 4 plots in Chandigarh, I went to Himachal. I took a bigger parcel of land. I got a team of architects and some planners together. I created today when I look back at it, it was a very shoddy job, but I created a brochure and a business plan, what I wanted to build there. And I collected some money. I called a friend in the US who's a lawyer and my partner now, and I said I want to raise money. I want to raise $5 million for this because I can buy the land, I can get my licensing done, and then probably sell it because I knew how real estate companies were doing that. They weren't putting their own money in. So I flew down to the US for the first time for business in 2006, and I wanted to raise $5 million. it was a learning curve. We raised about $1.5 million, but it was a great feeling. What you need to do is, firstly, you need to know your business plan in and out. You need to know what you're raising money for and what you're selling. Nobody is going to part with. It's very corny, especially when you go abroad and raise money. That give me X amount of your hard-earned money, and I'm going to fly down 7,000 kilometers and I'll generate wealth for you. I mean, nobody's going to do that. What worked for me was that I think when I spoke to people, they realized fundamentally what worked was that I would never go wrong in buying land in India, which was a huge plus because that's a stumbling block. Second, what worked for me was my homework was very meticulously done. My term sheets were drawn out, my agreements were drawn out, the land that I wanted to raise money on, I had all particulars for that. I had a business plan in hand. I had a rough sketch, a layout. I had the architectural team, the construction team that I was going to tie up with. I put down everything together, and I scored. I never raised $5 million for that venture, but I scored. It was a learning curve. You come back and think, I met about 40 people, and I think 10, 12 of them put in money. I also realized why the others didn't. And from there on, we've gone to raise about, in the span of the next 3 years, we raised about $50 million from people I don't know at all. From people, especially in the West, people who are not even Punjabis. Most of my funding came from physicians and lawyers who either whites or they had South Indian background. But it just clicked. And the other thing about funding is you don't want funding till the time you actually need it. Because like the boy here asked, sometimes your business plan actually doesn't need infusion of capital. And money is a very scarce resource. You need to understand if you borrow money, there's a lot of liability which comes with it. You need to really understand whether you actually need it or it's not the time. Because if you can do with, let's say 2 lakhs right now, never get 5 because you're going to make a mess of it. And so you need to really, the more I think about it is you need to do your homework well. That's it. And you need to believe in the idea, and you need to put your skin in the game. Nobody's going to put money on you if you yourself don't. I believe in that. A lot of people try and raise money by not contributing themselves. I think it's a little flaky because why would somebody bet on you when you don't bet on yourself? I mean, you should buy your stock first. That's what I think. So anything else, I'm open to that. I'm not an expert, but I can share my experiences with you. Thanks.
Thanks, Anupama. I'll just give a small background of, I represent InfoEdge. We run the websites Naukri.com, Jeevansathi, 99 Acres, Bridge and few more websites. Naukri.com was started in 98 and it was a very small site. There are a lot of actually residents. And in 2000 we raised our first round of venture capital, which was around 7 crore rupees for 17% stake. And over a period, Naukri became extremely successful. And in 2007, we IPO'd. Today, we are sitting on a cash of 400 crores. And after having done certain businesses, what we have decided is we will help others take the same journey. Our focus is consumer internet. The things that we have done successfully so far. So that's our core area. We try not to go beyond the consumer internet. And in terms of what we look when we are investing, our philosophy is slightly different. The first and foremost thing is the team that we look at, because we strongly believe that if fundamentally the person is good, he's capable. Even if he's backing a wrong idea, then there is a chance of course correction. So rather than looking at the idea, we first look at the team. That's the most important aspect as far as we are concerned. After the team, the second thing is the scalability of the idea. Because believe me, as far as the business plan is concerned, that gives us a sense of what he wants to do. We have seen when we presented our business plan to ICICI, we were expecting that we will do 12 crores after 4 years. We were actually doing 84 crores. So business plans are good stepping, they're the good template, but they don't pan out. Business will surprise you. The market will surprise you, so you cannot predict what's going to happen. So what we look for is that scalability should be there. The kind of business you want to go into, that there should be a fair chance that if you execute well, if you listen to your customer and provide a good value, then the business should scale. So the two things which is important for us is, first of all, whether the team is good or not, and secondly, the idea which they are pursuing doesn't have a scale. These are the two most important things. And for us, mandatory thing is that it should be consumer facing, it should be internet facing. So I'll leave it there. I'll take any questions that you have on that.
How is the corporate fund different from venture capital?
Okay. See, normally what happens is